QuickBooks Pro Desktop 2021 Bank Reconciliation. After having constructed the books directly from the bank feeds, this is going to be for the second month or a month after the first bank reconciliation that has been done, and therefore should be an easier process due to the fact that we don't have to deal with any kind of beginning balance issues after the first month of the bank reconciliation. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our bank feeds test file. We currently have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. We're not going to go through the bank reconciliation process for the second month of operations, just to show that it should be an easier process to do due to the fact that we have the beginning balance settled out. We are constructing, in essence, our books directly from the bank feeds, and therefore we shouldn't have any outstanding items as we would have even if using the bank feeds, if we were doing a full service type of bookkeeping system in which we were recording, say, the checks when we record them and the deposits when we make them, as opposed to waiting until those checks and deposits clear the bank to then construct our books with the bank feeds. So given that fact, we are constructing our books here. We're assuming, in essence, from the bank feeds. Second month of operation, the bank reconciliation process then should be very easy to do. We still want to do it, however, because that will verify that we've picked up everything correctly from the bank, including the fact that we got all the transactions that are included. Our beginning balance still lines up, so we didn't delete anything in the prior time period that had already cleared the bank. And we haven't missed anything that we had picked up or deleted anything or have any duplicate type of transactions in the process. Let's first take a look at our financial statements. Reports drop down. We're going to go to our company and financial. Take a look at the balance sheet standard. Going to change the dates up top and the customized reports from 01/01/20 to 12/31/20. And maybe I should make this end date 06/30/20. That's going to be the reconciliation date. That would probably be easier. So we'll say okay. And then as of this point in time, we have the 46/9/25/89/98, which is cleared the bank. Now, if I look at the bank statement, we're assuming this is the bank statement that comes from the bank. We also have 46/9/26/98 here. So that ties out. And so you might think, well, why do I need to reconcile? There's no reconciliation process. And really, you don't have to provide a reconciliation report right here. I mean, in other words, if you were to be audited by someone, like if an auditor was doing audits of the book, then they wouldn't need any bank reconciliation, which is actually the report that reconciles the bank statement to the books, because there is no reconciliation. It's the same number. But the only reason it's the same number is because we're not using a full service bookkeeping system. In other words, we're not entering the checks when we actually write them, but rather after they clear the bank. We wrote the checks from the bank statement, and we're not recording our deposits when we make them, but waiting until they clear the bank. So there is no actual bank reconciliation report, but we do still want to do the bank reconciliation process, because once again, that process will just give us a double verification. It's like an internal control type of check. And you might say, well, I already checked because the number ties out. That's true. You can kind of reconcile as you go, but you still want to get that point in time that you've said, as of this point in time, I looked at it and it was correct as of that point in time. And in the system, if you go back to QuickBooks here, if we double click on this activity, it'll also give you the indication that something has been actually reconciled with a hard check, as opposed to basically the little lightning bolt that we saw before that was here until I went in here and kind of messed it up because I went into the bank reconciliations. Notice those are kind of temporary marks. This is a full mark. This is a full check mark. That's a kind of nice internal control saying, hey, look, you physically went in there, you did the bank reconciliation, you tied it out, you double checked it as of that point in time. So that's what we'll do here. We're going to double check it as of this point in time, as of 6:30. And once we do so, all these items will have the actual check mark that we have done that internal control. The process should be very easy for us to do at this point. So we're going to go to the banking dropdown. We're going to go to the reconcile. We want to say it's going to be reconciled for June 30th. Now, we already have the beginning balance. It will already be there in the second month of operations. If you're looking at the first month of operations and your beginning balance does not tie out, take a look at the prior presentation and you'll have to deal with that one problem for 1 month, and then it should be good going forward. This $23,000, in other words, for the period end 6/30 is the beginning balance for the period end May 31st. $23,000 here is now the $23,000 there. Then we have the additions, we have the subtractions. It's going to end up at the 46,925.98, which we already saw is what is on our books. And then the detail right here is what is it recorded, which of course is the exact same thing on our books, not only by number, but also by date, because we picked up our information not from the time that we recorded it, when it actually happened, but when it cleared the bank. So we're actually going to match out everything to the bank statement here because we constructed our books from the same source. So I'm going to then go back to our books. The ending number is going to be the 46,925.98. So that looks good, right? That's the ending number here. So that looks good. We're not going to have to put anything in the service or interest because we would have gotten those directly from the bank. So they should already be included when we did the bank feeds. So I'm going to say continue and yes. Now you do want to make sure that when you do this, you check off this item, because if you do not do that, then you're going to be picking up items after the cutoff date, after 6:30, and then you won't reconcile, and you have to think about it more. So if I check this off, then the dates should line up. And even if I was doing a full service bookkeeping system, entering like the checks when I actually did them, when we put it into our system, then it will either be on the 6:30 bank statement or it won't, and that would be our outstanding type of item. So we could still use this, in other words, even if we were actually physically writing the checks, because when it clears, it's going to clear in the following month. So and now considering the fact that it should all tie out, I should just be able to, this is where we need to reconcile down here. This should be 0 at the end of the day. I should just be able to mark them all off, and then it should be at 0. We should be good to go. And if we didn't duplicate any transactions, the beginning balance tied out, we didn't delete anything from the prior year, which would throw off the beginning balance, and we didn't not pick up anything from the bank feeds, that should be basically as easy as it should be. Now, obviously, what we're doing here, if I uncheck this off and just check them off real quick as we go, is verifying if something was wrong. Then you would just verify item by item. It is a bit tedious, but that's what you'd have to do. If you're taking this information directly from the bank, even the dates will line up. So everything should line up perfectly. So we should then say, if you're not taking it directly from the bank, then your dates in your books will be earlier than the bank's dates that they cleared the bank. So I'm going to say, well, there's the 30, there's the 130, there's the 21. So we'll say, okay, there's those 3. And then we have the 625, the 40, the 3. So there's the 625, the 40, the 3. Looks good. And then we've got the 190, and all those. I've totally memorized them exactly. And there they all are. So done. And then on this side, we would check those off and say there's the 1813, the 537, the 75, the 63. There it is, 18, 5, 7, 63, the 50, the 30, the 25, 50. So there's the 30, 50, 25, 50. So we'll check those off. And so there they all are. Perfect. Perfect. So now we've reconciled them. Now before you reconcile, notice if I go to the transaction detail, they give you the little asterisk here. The little asterisk means that they're in the process of reconciling. So you got the little lightning bolt, which means that you've got them from the bank feeds and either matched them or you've constructed your books from the bank feeds, which means you've got them from the bank. And then you got the little asterisk saying, hey, you're in the process of reconciling these items. And then you'll be converting that to a check mark, which means that you have actually done the reconciliation process. You've reconciled. So let's go ahead and do that so we can get those check marks. So we're going to reconcile here so I can get the check marks. That'll make me feel good. So then we can run the reports. Reports are going to be very boring because there's no activity really going on. We've got the activity up top, which is basically the bank statement activity. So we started at 23, then we had the increases and decreases. We're at the 23,925. They're basically just repeating what's on the bank statement here. So no, and then our items match what's on the books. So what was on the bank then matches what's on the books here, 26,925. There's no difference between that number and what's on the bank statement because we made our books basically from the same source from the bank, and therefore there are no timing difference. Therefore the bank reconciliation is very bland. And then the stuff down below is going to be the transactions that happen afterwards, which are not really relevant to the bank reconciliation as of the point in time of 6/30/2020. So again, if you were to get audited, like if you were doing an audit with a company was auditing your books or something like that, and they'd say, I want to check cash and audit cash, if all you would really need to do is give them the bank statement and say, hey, look, I'm constructing the books from the bank statement. That's the accounting system we're using. And there's the number as of this point in time, 46,925. And here's the number on the bank statement. You wouldn't really need to give them a bank reconciliation because there are no outstanding checks or deposits due to the fact that we're constructing the books from the actual bank. But you still want to do the bank reconciliation just to verify that for yourself, which now converts the bank reconciliation into kind of an internal control check. So you get that hard check off, as opposed to so that you're verifying that you're picking everything up properly from the bank. So we recognize the system that we're doing, which has its pros and cons we've talked about in the before, that we're building our books directly from the bank, has its pros and cons. But given that system, then how does the bank reconciliation fit into it? It's going to be an internal control for it. This gives us more detail, but again, nothing new. Just note that if you had any reconciling differences, you really want the reconciliation detailed report, because that's going to give you the detail about those reconciling items, meaning outstanding checks and deposits. There are none right now, therefore the detailed report doesn't give us any more information that's really relevant to us most of the time for the bank reconciliation, because there are no outstanding checks and deposits. If we go back to the transaction detailed report, we see all these items are now checked off. So we've got the hard check, meaning we actually pushed the button, we went through the process, we pushed the button, did the bank reconciliation, we got the report. The report's really bland, but at least we know that we went through the process. We did kind of like the internal control of the reconciling process.